Hey there, future stock market pros. Welcome back to Inspire Sphere, brought to you by We Grow. Today, we're diving into the exciting world of stock valuation. But don't worry, we're going to break it down in a way that's easy for everyone to understand, no matter your age or experience level. So, let's start with a quick peek into the thrilling world of the stock market. Think of it as a giant auction house where people buy and sell pieces of companies. But before you jump in, you need to know how to value those pieces, right? Our first tip comes from the legendary Warren Buffett, who's like the Yoda of investing. He says, buy a stock as if you are buying the whole company. To understand this, imagine you want to buy a pizza joint. You'd want to know its profits, debts, and future potential. Apply this mindset to stocks. Next up, we have the price-to-earnings ratio, or PE ratio for short. Imagine it as a party where the price of a stock is compared to the earnings it generates. A low PE ratio might mean it's a bargain, and a high one might indicate it's pricey. Doing your due diligence is the beginning of your journey to finding out the answer to that question. Just remember, everything has a price. Putting a little extra time in the form of company research will tell you whether you're paying more than you should at the moment. So, all you have to do is wait until the price is right, and you can just sit back and watch your investment grow. Patience is key. Now let's talk dividends. Imagine you own a lemonade stand, and it makes a profit. You decide to share some of that profit with your investors as dividends. Companies do this too. If a company regularly pays dividends, it's a sign of stability and can make a stock more attractive. Just don't fall for the dividend traps. Investing in a company just because it pays a high dividend might not be the payoff that you're expecting in the long run. Our fourth tip is all about growth potential. Imagine you're investing in a tree. A young sapling has more room to grow than a mature oak, right? Stocks work the same way. Look for companies with exciting growth prospects, like expanding into new markets or introducing innovative products. Finally, our fifth tip is the art of research. Imagine you're a detective and the stock market is your mystery to solve. Dive into annual reports, news, and trends. Keep learning, because the more you know, the better decisions you'll make. There you have it, folks. Stock valuation isn't rocket science. With these 5 beginner-friendly tips, you're well on your way to becoming a savvy investor. Remember, learning about stocks can be fun and profitable. If you enjoyed this video, give it a thumbs up, share, and don't forget to subscribe for more entertaining content. And it helps us with the algorithm. Have a fantastic day. May your stocks soar to the moon. And as always, remember to stay positive.
We grow.